Is your company's learning and development department still seen as a cost center? When it comes to budget cuts around the boardroom table, is your HR team always in the firing line? Well, we are going to show you how you can make your learning and development department self-funding. To explain how you can achieve this, we're going to unpack the tax incentives that can be accessed to cover the cost of the learnerships you are implementing in your business. To explain this in more detail, here are Mpumi and Andre from our business development team.
So Andre, as a business development consultant, I often I meet with clients who are keen to embark on learnerships, but the cost of running these learnerships are so costly, as they refer to it, and they simply don't have the available budget. And when we ask them about the tax incentives and the rebates that are available for learnerships, they often don't understand the full implications. Can you share some of your insights on what funding is available for businesses for learnerships?
Thanks, Mpumi. Yeah, and absolutely. I think we can break it down a little bit for the guys. Essentially, there are two different ways in which the L&D department can recover costs associated with running learnership programs. But first, let's understand the tax incentive, right? So the tax incentive that we're talking about is part of the Income Tax Act, which government introduced in 2002. Now, where Section 12H comes into play is they essentially incentivize businesses to bring about training in their organizations and obviously getting companies involved in these initiatives. Now, to look at it in a holistic approach, essentially government wants to achieve two real big things, right? And that's alleviate unemployment in South Africa and upskill South Africa. And as part of that initiative, they are incentivizing businesses to embark on these learnership programs through providing tax incentives or taxable allowances, right? Government cannot do this on their own. So they are getting companies involved by this initiatives and obviously incentivizing them to participate through providing the taxable allowances. So what Section 12H provides is a taxable allowance for able-bodied candidates up to 80,000 Rand per candidate that successfully completes the learnership. And then for people living with disabilities, the allowance is 120,000 Rand per candidate that successfully completes the program.
Andrew, that's great, as it will cover a majority of the cost of the learnership. But how is this paid out to the companies?
So the Section 12H allowance is broken into two different allowances, right? So the annual allowance is essentially half of the total allowance, all right? And is available when a learner is signed up on a learnership agreement and is registered with a accredited training provider. Now, you can claim this taxable allowance during the year of assessment in which the learner signs the learnership agreement with you as the employer. The learnership agreement that was entered into pursues a trade of which is carried out by the employer. The employer derives an income from that trade, and that the learnership program is registered with the relevant SETA. Now, as I've mentioned, there's the annual allowance, right, which essentially is half of the total allowance, and then there's the completion allowance. And the completion allowance is a once-off payment once the learner has finished the learnership with the relevant provider. Now, it's important to note that when you are talking about the annual allowance, it causes a lot of confusion with a lot of clients. How the annual allowance, do I receive half of it by signing up the learner agreement? And the answer is no. That payment is based on a pro rata as to when the learnership is registered with the employer, relevant to their financial year end. All right. Now that becomes complicated, and later on we'll do an example of how that would look like say when you've registered a learnership program 3 months before the end of your financial year, and how you can claim those allowances.
Thanks for clarifying that, Andre. You mentioned to us that there is a second way that companies can save their learnership costs. Can you tell us more on that?
So Mpumi, the second cost saving essentially is looking at the expenses of running the learnership program. Now, in order to understand this, one must understand how net profit is calculated, right? So net profit is calculated by adding the total amount of revenue generated by an organization and deducting the expenses. So I'll give you a little bit of an example. If your company generated 1 million in total revenue and you invested in a learnership program that cost you 200,000 Rand. Now, that 200,000 Rand is deducted from your 1 million as an expense, and SARS essentially then taxes the 800,000 Rand and not the 1 million. Now, with company tax running at 28%, you can understand how that 200,000 Rand is quite a substantial saving, right? So let's look at a practical example of costs associated with implementing a learnership program, and then obviously the tax benefit from running this project. So if you look at the recruitment cost forms, part of your project costing, industry norm is charging about 3,500 Rand per recruited learner. Typically you're looking at about 25,000 Rand for management and delivery. You've got options in terms of implementing work readiness programs or having hosting as part of your package. And then obviously the stipend forms part of your cost. So if you take 4,500 Rand times by 12, that gives you 54,000 Rand. Here you can see just the tax benefits, and here we speak about the Section 12H for the able-bodied candidate, the 80,000 Rand, and then Section 12H for people living with disabilities at 120,000 Rand. Then we're talking about the tax deduction from your net profit before tax. Remember, we explained the net profit before tax and how that calculation works, and by implementing a program that the expense is being deducted from your net profit. For purposes of the illustration, let's say we are doing 10 able-bodied candidates and we are doing 5 candidates with living with disabilities, and here you can see the total cost of the intervention is about 1.2 million. Now, for purposes of illustration, let's look at the taxable allowances because of Section 12H. And for 10 learners, it's 800,000 Rand, and for 5 learners living with disabilities, you're looking at 600,000 Rand. Total taxable allowance, 1.4 million. Now, here is the total tax saving. This is the physical Rand value that you do not have to pay over to SARS because of the intervention that you've implemented. Now, here, if you look at the able-bodied candidates, it's 28% of the 800,000 Rand works out to about 224,000 Rand. Similarly to the program for people living with disabilities, it is 28% of the 600,000 Rand is 168,000 Rand. And then because of implementing the program, you are deducting the total cost of the intervention and times by 28% so that you can see what is the Rand value of tax money that you do not have to pay over to SARS because of the implementation of the program. Now, from this illustration, you can see that the total cost of the intervention is 1.2 million, right? But the actual saving, because you've run a learnership program specifically, you're saving about 740,000 Rand. That is actual cash that you do not have to pay over to SARS because of the intervention. Now, from this example, you can see how that if you have not been running learnership programs, that you are missing out on creating a budget for yourself, because you are more than halving the expense of running the program by the tax savings, which generally can be taken and put into next year's training budget. So Mpumi, it really is a win-win. In essence, you can see the benefit for the company, right, from the illustration. But the real benefit is towards the learner, who you have upskilled and empowered to potentially lead a life that this person, without the company's assistance, might not have had.
That's great to know, Andre. I'm sure many of our viewers will be stunned, as I am, to learn how much companies can claim on the Section 12H incentives, coupled with the knowledge that they can use learnerships to provide extra hands during on-site learnerships and build a tried and tested talent pipeline for the future too. It really does make a compelling argument for companies to play their part in upskilling our country.
Andre and Mpumi have explained the S12H tax allowance and the incentives this offers companies to sponsor learnerships. But businesses can also benefit even further through the mandatory and discretionary grants that are available through the SETAs. Make sure you don't miss our November podcast when we explore and explain WSPs, ATRs, and pivotal reports and how these will push the productivity of your employees and add to your company's performance and profitability.